Hey everyone, welcome back to Corporate Decoder, the place where we take apart those confusing corporate filings. Today we're diving into a report from Parks America, and spoiler alert, it involves not one but two stock splits. Buckle up because we're about to see how they tried to pull a fast one on the market. This report is all about what happened at Parks America's annual meeting. We're talking votes on directors, accountants, and some seriously interesting moves with their stock. Let's see what the shareholders decided. First off, let's talk about the main event, the votes. This report details the results of their annual shareholder meeting in early March. They had a decent turnout with over half of the shares voting. That's important because it means the decisions made are actually representative of what the owners want. The first vote was on electing 5 board members. All the nominees got a pretty solid yes from the shareholders. That's a sign that people are generally happy with the leadership. Looking at the specifics, Ralph Molina got over 37 million votes in favour, with only about 100,000 abstaining. The other nominees had similar results, so it was a clean sweep for the existing board. Next, shareholders voted to approve GBQ LLC as the company's accountants for the upcoming year. Again, it was overwhelmingly approved with over 39 million votes in favour. Check out these numbers. Almost everyone voted yes, only a tiny fraction voted against or abstained. Here is a crucial one. This is where shareholders get to give a thumbs up or thumbs down to how much the top executives are getting paid. It's non-binding, meaning the board doesn't have to listen, but it sends a strong message. The majority voted in favour, but there was a bit more resistance here than with the other proposals. About 200,000 votes were against it, showing some shareholders think the executives might be getting paid too much. Alright, now for the really interesting part, this is the big one. The company proposed not one, but 2 stock splits, one right after the other. First a reverse split, then a forward split. The shareholders agreed to the plan with over 37 million votes in favour. So why do this complex manoeuvre? Finally, there was a vote to allow the meeting to be adjourned, if needed, mostly related to making sure everyone had enough information about the previous vote, or if they needed more votes to pass it. This also passed easily. This shows they were committed to getting those stock amendments through no matter what. So what does this all mean? Well, on the surface, everything looks pretty standard. Board members were re-elected, accountants were approved, and executive pay got the thumbs up. But that stock split dance, that's where things get a little strange. Why do a reverse split to then do a forward split immediately after? I'll tell you what's going on. The most common reason to do a reverse stock split is to artificially increase the share price. A higher share price can make a stock more attractive to some investors who may see it as a sign of stability or growth. It can also help the company meet minimum listing requirements for major stock exchanges, which often require a minimum share price. But in this case, the company decided to do a forward split immediately after. They knew that investors would feel manipulated by the reverse split, even though this is legal. To try to be sneaky, they decided to also do a forward split right after, in an attempt to cancel the negative sentiment by presenting a positive image. Now let's zoom out and look at Parks America as a whole. They're in the business of owning and running theme parks. The good news is that the theme park industry is generally pretty stable. People always want entertainment, so there's consistent demand. However, they face competition from the big players like Disney and Universal. Parks America needs to find ways to stand out, whether through unique attractions, better customer service, or more affordable pricing. One of the biggest risks for any company in this industry is the economy. If people are worried about money, they're less likely to spend it on things like theme park tickets. The company also needs to keep up with changing trends. What's popular today might not be popular tomorrow, so they need to constantly innovate and refresh their offerings. Looking at the direction of the company, I'd say they're in a reasonably stable position. They've got a proven business model, but they need to be smart about how they manage their finances and adapt to the changing market. The stock split shenanigans do raise some questions about their long-term strategy and communication with investors. In conclusion, this filing shows a company that's generally doing okay, but is playing some risky games with its stock. Keep a close eye on how Parks America navigates these challenges and whether they can deliver real value to their shareholders or if it's just smoke and mirrors. Thanks for watching Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of corporate filings. Until next time, stay informed,